Hello everyone, I am Black Jeff and today I'll be teaching you how to mark your POI. A lot of persons have been asking me and they've been asking like they are saying, Black Jeff, how do we mark our POI? Right? I think this is one of the places a lot of persons are finding difficult. Now, one thing you should know is this here that if you want to mark your POI, you don't just mark. Okay, first thing, let me start by defining what POI means. POI simply means point of interest. POI simply means points of interest. Now, what is this point of interest? This point of interest is a place or a point you are looking out, you are looking out to take your entry from, right? A point of interest is a place in the market you are looking at to take your entry from. Like me, for example, now, before I enter any trade, I always remember what someone said. Yeah, he said trade in the zone. Now, this zone is your point of interest. That is, if, for example, this market is moving like this, the market is moving, trending like this, and you decide to draw this point as your point of interest, decide to take it as a point of interest, and then the market comes down and decide to give you confirmation candle. For those of you that use confirmation candle, a lot of persons would be rushing to enter from here. Black Jeff will never do that. Black Jeff Metis will never do that. That is why a book is written called Trade in the Zone. That is, what does it mean to trade in the zone? It means you should trade in your area of interest. That's another name for point of interest. Area of interest, or the zone you want to take your trade from. So what are you going to be expecting? You're going to be expecting the market to come into this zone, right, before you take your trade. Now, beginners trader would be rushing to take a trade when they see that they have something like this. They'll be rushing to take their trade because of FOMO, fear of missing out. Now, Black Jeff is here to tell you today that you should not be in a hurry to take a trade. Now, one thing that should always be in your mind, always tell yourself, I'm going to trade in my zone. Always tell yourself that you are going to trade in your zone. This will help you to be professional and profitable. One of my vision is raising professional and profitable forex traders. That's why I'm giving valuable content like this. Now, one of the ways you can show that you're a professional forex trader is in your entry. You don't FOMO. I have always been telling myself that if the trade does not get to my area of interest, the trade does not get to my zone, it doesn't get to my point of interest, I'm not taking the trade. If the trade would go, it should go. There are other setups that will come up in the future. So why waste your money on this trade that has not gotten to your point of interest or your zone or your area of interest? So my advice to you is this: always wait for the market to get to your entry point before you take a trade. I am very sure that this is a place whereby a lot of people have been making mistakes. They've been blowing accounts, they've been losing money. This is the area they've been losing money. Now, do you want to stop losing money? Do you want to stop blowing accounts? Start trading in your zone. And I don't just advise that you just trade in your zone. I always advise that you trade with confirmation pattern in your zone. That is, if you are taking this point here as your zone, your area of interest, wait for the market to come into the area of interest with the body of the candle, and you wait for a confirmation pattern. There are various confirmation patterns. The one that Black Jeff uses are bullish engulfing. One. Second, bearish engulfing. Number three, I use bullish harami and bearish harami. Number four, I use morning star. Five, I use morning star. Six, I use evening star. These are the most profitable candle confirmation I have seen or I have used so far. If you want to be profitable, use this 6 candle confirmation in your entry. It will increase your win rate. It will increase your win rate. Now, one thing you should know before you execute a trade is that let your structure be right. Be right with your structure. That is, if the market is moving in an upward direction, that is, you are having break of structure in an upward direction, you should be looking for buy opportunities. Why? If you're having break of structure to the downside, you should be looking for opportunities to sell. You should be looking for opportunities to sell. If you're having break of structure to the downside, you should be looking for opportunities to sell. Now, where is this point you want to sell or you want to buy from? You want to buy from a point of liquidity. Now, where is that point of liquidity? That point of liquidity is the starting point of the move that goes up to break structure. That is, if the market is moving from here and is pushing upward, this is your point of liquidity. I said it in one of my videos on YouTube that what makes a break of structure is this. One, it must have, for an uptrend, it must have the V shape. While for the downtrend, it must have the letter A shape. Are you seeing that this guy is looking like letter V? Look at letter V. While for the downtrend, is looking like letter A, the A shaped letter A. So your point of liquidity will always be this point here. That is, if you see that, okay, let's do this now. We have this as our V shape. You see this edge of the V shape that the market is pushing up from to go and break structure is a point of liquidity. So you can put your point of interest on it, your area of interest, your box on it as your area of interest, and be expecting the trade to come inside of it. Then once you see a confirmation candle, you will buy to the upside. That happened on SAU USD. On SAU USD, I said that once we have a break of structure to the upside, that move here, the edge of the V shape that pushed up to go and break structure, that is a point of liquidity. So that point of liquidity is where we are taking as our point of interest or area of focus or our zone. Now, how do we mark out our zone? Before I talk about how we mark out our zone, you must remember that if you want to get the accurate structure of the market, the best time frame to mark out your break of structure is H1 time frame. This is what I've been doing and I've been getting results. So the best time frame to mark out your break of structure is the H1 time frame. The H1 time frame. Now, this is a break of structure. Do not forget that our topic is point of interest, but I just want to let you guys know how to go about it. Now, if this is our break of structure, now you may want to ask, okay, we are marking our break of structure. on the H1 time frame or the H1 time frame. So which time frame should we use to mark out our what's it called, point of interest? Now, on currency pairs, if you trade currency pairs, the best time frame to mark your break of structure on is the M5. You can draw this on H1. Just do something on H1. After doing this on H1, covering part of the week, then you are going to M5 to find an unmitigated order block on M5 time frame. So let's go to M5 time frame to find an unmitigated order block on M5 time frame. Now, what do I mean by an unmitigated order block? What I mean by an unmitigated order block is, okay, first of all, what is an order block? Let me start by explaining what an order block is. An order block, this was the place we mark here on H1 time frame, right? An order block is the last candle before the impulsive move. Now, what impulsive move is this? Uptrend, right? This impulsive move is moving to the upside, pushing to the upside. Now, your order block is that last red candle before the green impulsive move. That is your order block on M5 time frame. I said that the impulsive move are these green candles pushing to the upside. Now, your order block is that first red candle before the impulsive move. Now, if the order block for an uptrend is a red candle, what do you think the order block for a downtrend would be? It would be the opposite candle, which is the green candle. So if the impulsive move is bullish, your order block is the last red candle before the immediate last red candle before they push to the upside for an uptrend. While for a downtrend, it is the last immediate green candle. I'm going to show you guys here, okay? Let's say, for example, now, this is a down move. For example, now, this guy here, this move to the downside. Now, if we want to take our order block from here, this is where the red move started from, pushing to the downside. Our order block will be this last green candle covering the wick and the body. That will be our order block. So that will be our order block. The last green candle covering the high and the low is our order block. Look at this last green candle is what I'm taking before this long red cell, this green, there's the continuation of this red. So this last red candle is my order block for the downtrend. So once the market gets into my order block following market structure, then I cannot take it as my order block for a sell. But we know we are in an uptrend. So what are we expecting? We are expecting the market to come back into this our order block and buy off from there. That's what we're expecting. We're expecting the market to come into our order block and buy off from there. So if the market had come into this our order block, after seeing this engulfed candle, here would have pushed to the upside, moved to the upside. This is 6 risk to reward. There is a way you can enter the market even if your area of interest is taken out with the body of a candle. That's called reclamation. I'm not going to talk about that tonight. That will be a topic for another day. I'm just showing you guys how to enter, how to mark your point of interest. So you look for the unmitigated, what's it called? Unmitigated order block is what you are taking as your point of interest. Now look at now. This particular point of interest is unmitigated. What do I mean by mitigation? That is, after this order block is formed, after forming this green candle, the market did not come back into the order block, into the POI, before pushing to the upside. That means this guy is unmitigated. Like this red candle now, this one is a mitigated order block. Look at, this is a mitigated order block. After drawing my order block, right? Look at, market formed a red candle to the downside. A green candle has tapped into your area of interest before going to the downside. Do you notice that in this green side, for this downtrend, for this uptrend, right? Not after the market has formed this long green candle, no candle wick entered inside before pushing finally to the upside. But this case, it is the opposite. After forming this green candle, which is your order block, e then formed a red candle to the downside. Then a green candle wick entered inside the box before selling. That means this is a mitigated order block. So in this kind of scenario, what are you going to do in this kind of scenario? You are going to look for an unmitigated order block. So you may have to switch. Instead of taking this one, because this first guy is already mitigated, you may have to find the one that is not mitigated, and this is the only one that is not mitigated around there. This guy is the only one that is not mitigated, so this would have been our point of interest. So you're always looking for an unmitigated order block around your liquidity point, and I just showed you guys where the liquidity point is, right? So this one here is an unmitigated order block. This guy here is an unmitigated order block. Look at, nothing after he formed this green candle. I said the last green candle, he then formed this red candle to the downside. Nothing tapped into it before finally pushing to the downside. So this is an unmitigated order block. Now, mind you, if let's assume this order block now was mitigated before pushing to the upside, right? Now, would I come and take this guy as my unmitigated order block? No. Why? It is very far from my liquidity point. The place I am taking as my order block should not be far from my liquidity point. Now, the reason why I am taking this guy here as my order block, it is because of the fact that it is not far from my liquidity point, initial liquidity point. That's why I'm taking here as my point of interest. Now, another must do while taking trades from your zone or your point of interest. Like I said, trade in your zone. No matter what, the market should not break your zone with the body of the candle. If the market breaks your zone with the body of the candle before forming a candle confirmation pattern, that trade is already invalidated. So this gold trade was already invalidated for many people. Why? Because it came into, I always said that it should always come into your POI with the body of the candle. This guy had come into the POI, my point of interest or my zone, with the body of the candle It then formed this harami candle. So I would have entered from here for pushing to the upside, but I would have been taken out. So let's assume this guy here did not happen, and we just miss that this market pushed down before forming this engulfed candle. This is not very, very right to enter. You should always trade in your zone. What do I mean? Once the market gets into your zone with the body of the candle, not a wick. Like here now, it entered with a wick, I would have not taken it. It entered into your zone with the body of the candle, then wait for a candle confirmation on M5 time frame. On M5 time frame, that other block you use, that's the same time frame you use for the other block, is the same time frame you are waiting for your candle confirmation. On M5 time frame, then after seeing your candle confirmation, you take the trade to the upside. So that is how, this is how to mark out your points of interest. This is how to mark out your points of interest. Let me find another example. Let me find another example to show you guys. All right, perfect. This is another example here. We have this guy here. Look at, we have a liquidity point here. Look at this liquidity point. Look at, we have this liquidity point here. We have, okay, we actually have more than one liquidity point here. We have this first guy here. We have this second guy here. Then we have this last guy here. Now, the best thing to use to draw your liquidity point is not a line. You use a box to get your point of interest. I would have put my box here, but without wasting much time, this guy has been taken out. I don't think there was candle confirmation here, so I'll have to move it to this one at the bottom. After marking this, so just want to just mark it on H1 first, then I will switch to M5 later on. Let me now switch to M5 and adjust it on M5. Let me find that spot and I will adjust it on M5. All right, perfect. Now remember, we are finding an unmitigated order block, right? Do not forget, we are finding an unmitigated order block. We are going to find that the unmitigated order block. Now this is the last red candle that was formed before the push to the upside. Look at it. If the candle is not very long, if the candle is as long as this, I will only take the body, or 50%. If it's very long, I will only take 50% of the entire candle. But if it's not long, I will mark out the body and the wick of the candle. Like this case now, this candle is not very long, so I can mark, this is the candle I'm marking, so I can mark the entire body and the wick of the candle because it is not very long. If I was to, let's assume now that, okay, then let me use this red candle now. Let's assume if I'm to draw my point of interest from this long red candle, right? This is what I'm supposed to do, covering the full part of it. Instead, I will take only 50% of the length of the entire candle. I will only take 50%. But this candle is not very long, so I can take the entire body and the wick of the candle. All right. So if you check carefully, remember I told you that we are always looking for unmitigated order block. Now, if you check carefully, you will notice, right, that this guy here is already mitigated. The reason why we are using unmitigated order block is because it has high tendency of working. That's why we're always using unmitigated order block. Now, look at this green candle has tapped into it with his wick, so it may likely not hold. So the best thing to do is to now take this unmitigated one here. Even you can now see this guy here is also mitigated. This guy here is also mitigated. Now, when this guy is mitigated, I cannot come and take from this point at the top. Why? Because this point at the top is far from my liquidity point at the bottom. So I will just still take this one at the bottom. I will still hold on to this at the bottom. Why? Because this nearest point is also mitigated. The one at the bottom is also mitigated. So I would rather stay with the one at the bottom, marking this the entire body and wick of this red candle. So let's switch and see what will happen there. Now look at, do you see that the market came into the, what's it called, into the your zone with his wick before pushing to the upside. But personally for me here, I will not take this trade because I always prefer the market to enter into my zone with the body of the candle before taking it. So look at it happened here. Perfect. Look at it entered into my zone just a little with his body. Then he pushed up to form this engulfed candle. So I would have taken my trade from here. After this engulfed candle, my stop loss will be below, a little below my zone. Look at, a little below my zone, then push to the upside. Now I've gotten what's how many risks to reward? More than 4 risks to reward. More than 4 risks to reward. But there is something I always teach my mentees. Yeah, I always tell them that whenever you see an engulfed candle form, a long engulfed candle on 5 minutes time frame, the best thing to do is to wait for the market to cover. After the market has formed an engulfed candle, you can enter, or you wait for the market to come back and retrace to 25% of the engulfed candle or 50% of the engulfed candle, so that if you want to risk less. But if you are scared of missing out, just enter immediately the engulfed candle is formed on M5 or your Morningstar or your harami. Just enter immediately. So if you are taking this trade, you'd have been in profit of more than 4 is to reward. So this is how I mark my point of interest, my zone, my area of interest. You see that this market entered into it with the wick. I would have not taken it. It then came back into it with the body, then pushed up to the upside. It never came back again. Pushed up to the upside, and it kept going to the upside. Let me see the risk to reward that that given. Oh wow, this is massive. Look at 30 risk to reward just by just this simple thing I just taught now on what's it called, liquidity and zone area of interest. You'd have had over 30 risk to reward. That's very massive. So I believe this video have been very helpful to you. If you've not subscribed to my YouTube channel, kindly subscribe to my YouTube channel, right? Now, if you want to connect with me from any part of the world via WhatsApp, my WhatsApp number will be in the description of the video. It will be in the description of the video. So kindly message me on WhatsApp, right? If you want mentorship, you can visit my site in the description also to let me know the kind of mentorship you want. Do you want a private mentorship? Do you want a one-on-one mentorship? Do you want a group mentorship? Just let me know. So don't forget to subscribe, comment, like, and share this video. Peace out.